Hello, my name is Ivan, aka Armenia. I'm a professional trader with more than 10 years of experience. I'm a main trader in VTF trading, where we share our trades in crypto, stock, and Forex market. Today we're gonna talk about liquidity and RSI divergence. This is third block of our free course. Don't forget to hit subscribe button and set notification on. What is liquidity? Liquidity is the open interest of buyers and sellers in the market. During trading, traders create liquidity by opening positions and placing pending orders. Liquidity is determined by stop losses. Traders who open positions from support or resistance levels, as well as those who trade for breakouts. Retail traders are not the primary target for smart capital. Their target is funds. They create a large pool of liquidity that smart capital needs to fill their orders. Types of liquidity. Buy stop liquidity, stop losses of traders opening and short positions. Sell stop liquidity, stop losses of traders who open long positions, and time liquidity. Above each high, there are stop losses to buy. But the largest accumulation of orders will be behind certain swings. You need to pay attention to them first of all. Types of time liquidity. Previous monthly high, previous monthly low. Previous weekly high, previous weekly low. Previous day high, previous day low. High of the day, low of the day. Old high, old low. Equal highs, equal lows. Daily open, weekly open, monthly open, and etc. Time is very important in trading. I will show you this at the end of this video. This is an example on like British pound. As you can see, we have equal lows here and equal highs. We have external liquidity. We took, this is like was our first target, equal lows. We came to this buy to sell zone in premium market. Went down to this external liquidity, we grabbed it, and then went up higher. First target was this internal liquidity, this specific equal highs. Again, previous weekly high, previous weekly low. You can see how accurate it is when we like came in to this previous weekly high. We took liquidity from this high and went down, and by like couple pips took liquidity from this previous weekly low and bounced to 50% of this range down. One thing about liquidity and how it builds, it's like trend liquidity with like compression. This is like, it calls like low resistance liquidity run. The formation of trend liquidity for sale of purchase by effectively delivering prices. The formation of swings and substructures, lower high, higher low, is accompanied by a test of resistance zones upon reaching the point of interest in the discount premium market. An aggressive markdown of the asset begins, the reason for which is the absence of resistance zone. I will show you a few examples because it's kind of complicated topic. As you can see, have huge compression of Bitcoin, and as a result we went up without like any resistance, which is like flight up. One more example. This is like some shitty coin, but it's good to show you my point of view. Like 30% pump, like with a few candles. This is like when we're taking like internal liquidity, we build liquidity and without any resistance, like we going down to this swing, and this is like place where we turning around to this fair value gap. Again, one more example of compression. As you can see, price just like fly down without any resistance, and just price melted. This is like wasn't Bitcoin. Now we're talking about like divergence. Divergence, this is the discrepancy between the direction of the asset price and the readings of the RSI indicator. There are like three types. classical, extended, and hidden. Hidden is the most important one. Classical and hidden divergence. Classically displays as possible trend reversal of a correction beginning, identified by the formation of a lower low, higher high on the chart and a higher low and lower high on the indicator. Hidden divergence is a confirmation of the trend's continuation, identified when a higher low or lower high is formed on the chart and lower low, higher high is formed on the indicator. This is like a few examples. On this chart, as you can see, we can see a classic and hidden. This is a classic divergence. This is a hidden. And this is hidden again. You have to understand, the RSI indicator is used to look for divergence, drawn without candles like shadow, and divergence is considered as additional factor to your analysis, not independent tool. So you should understand RSI calculated like by average numbers. So it's showing you the past basically. And you don't need to rely on it like heavily. It's just nice tools that you can add to your analysis. And divergence between the chart and the indicator from below will always be a bullish divergence, and divergence from above will always be a bearish. Now I'm gonna show you like few examples on a real chart. Now I want to show you some examples of like a liquidity and RSI divergence. So let's open Euro US dollar. As you can see, I have like perfect here internal liquidity, where we probably will get bounced to this fair value gap, and I have external liquidity. Also, look at this, how accurate this was. We had this external liquidity, we made this like up trust, and we went lower. There's a huge range with like two. How to trade range, I'm gonna talk in block 7. I'm gonna tell you how to trade in range in a simple way. I'm not gonna talk about like Wyckoff and how to identify all this stuff and what each phase means. I'll just like tell you exactly what you have to do to trade range. That's all. Okay, let's back to liquidity. Every day when market like opens, you have to mark this like level, like daily open. Same for weekly open. Why it's important? Because market controlled by algorithm, and every day in the same time market will open, will do like same stuff, algorithm will do like same stuff every day, because it doesn't sleep, it doesn't feel tired. It will do like the same stuff over and over again. When you trade in like Forex market, like indexes, you should understand that you will have manipulations in the same time every day. I'm gonna tell you time in my time zone, which is like Moscow time. Right now it's midnight. Yeah, it's midnight. So as you can see, 10 a.m. my time, London opening. What we have here, like on London opening, this is Nasdaq. We had manipulation taking all this liquidity exactly at 11:15. So at 10 a.m. my time, 9 a.m. Central European time, 3 a.m. Eastern time, or midnight Pacific time, you can like check it. We have manipulation when London session is opening every day, and you can see this manipulation since market opens till like 1.5 hours. then market go to consolidation for waiting for New York session. When New York session is open, you have to wait for one more manipulation. It's a New York manipulation. It usually takes previous weekly high lows, daily high lows, like testing daily opens. Like, by the way, like, look at how accurate this is. Why we closed exactly on daily open. You can think about it. Then we took liquidity from this lows. This is internal liquidity. We closed exactly above daily open and went higher by taking this liquidity as well and getting higher and higher, and took this liquidity. This is like why we stopped, because we took liquidity from these highs and these highs. You should understand how important this is. Okay, now let's check monthly chart. So I want to show you why it's so important. Monthly, previous monthly high taken, previous monthly low taken, and you can see reaction. Monthly low taken by like few points, and we went up higher. Every time when we're taking some key levels, like we have like huge reaction. It happens because big players like in the hedge funds, people with big amount of money like bank traders, they put their stops on the important swings on monthly time frame, daily time frame, weekly, etc, etc. And by analyzing this and seeing these levels will help you a lot. Okay, now let's talk about like RSI. Let's look at this screenshot that I made, because it's a good example. I don't usually use RSI, just like good tool, just like for confirmation of like my position, because here I saw that we already have this fair value gap on the weekly time frame. We break market structure, so we have uptrend on daily time frame. Also, we've been in consolidation for some time. I sent analysis like in Discord about all this picture, how exactly I see it and why we will go up and why growth will continue. And even like from here we will go up, we'll continue going up further to like 35k. This is just was some nice confirmation to my analysis, and this is like why hiding divergence so important compared to like classic, because not so many people can see hiding divergence. One more example on Bitcoin 6 hours chart. This is a classic bearish divergence, but also it was triple high. I will be talking about this like pattern. This is an extremely bearish pattern, and all are bullish, depends on like situation. And I don't need like the RSI here, but it was nice confirmation again. Yeah, as you can see, there is hidden divergence, and it just like helped me to open long position. But again, it was a break of market structure on like 6 hours, and my target was closest liquidity plus fair value gap. And as you can see, like price like went down. That's all. Thank you for watching. Don't forget to hit subscribe button and set notifications on, and like this video so and other people can find it. We have a Discord group where we send in our calls. I hope you like it. Have a nice day. Bye.